Hello, everybody, and welcome back to another exciting episode of the Breaking Bitcoin Market Update. As always, with your host, that would be me, Justin Wise. I am the lead analyst and senior mentor at CrackingCryptocurrency.com, who brings you this stream. Hopefully, everybody is doing absolutely fantastic today. However you happen to be watching the show, whether that's on Twitch, DLive, Twitter, YouTube, Trovo, and or Facebook Live. I think they call it Meta Live now. I don't care. I'm still going to call it Facebook Live. And wherever you happen to be in the world, we've got a great show for you guys today. Obviously, Bitcoin pretty much just consolidating, a couple of kind of gut-wrenching drops over the evening hours. We actually are a little bit lower than we were yesterday, moving into the evening close, but we see price overall moving sideways, a little volatile. We've seen some big buys come in over the past couple of hours, so we're a little hopeful here for a little upside action, and that's going to be the direction that we're going to mostly likely be trading in on the lower time frames today during the stream. We are, of course, still in the 3-hour super duper DEMA short. Our automated strategies do still have a short. However, we are in our weekly long position after scooping funds up off the bottom. And we did take the daily long position on the reversal baseline and bounce. And we'll talk about that today. We'll talk about how all of those positions kind of play together. We'll also be looking at some of the altcoin markets and answering your questions and doing chart requests as well. So if you have any of those, feel free to drop them in the chat. As always, the sponsor of today's show is you guys. So without you guys, the show would not be possible. Huge shout out, as always, to the premium members, the individuals who have decided to improve their lives, to seek the goal of financial freedom by trading alongside of us, learning how to build an automated strategy, learning how to build an indicator strategy, or just learning to improve their discretionary trading skills, whichever route you may be upon in your trading journey. Either way, we applaud you and commend you. So thank you guys so much. Huge shout out to the premium members and huge shout out to all you guys watching at home. If you guys want to support the show, the best thing that you can do is hit that like button on YouTube, subscribe to the channel if you have not already, and leave a comment after the show. It really does help boost us up in the algorithm and helps people know that we exist, which makes my life a whole lot better. Let's see here. If you're watching on Twitch or DLive, a follow or a follow. It's a follow or a subscription. Yeah, follows or subscriptions are appreciated. I think it's the same on Trovo. And of course, if you're on Facebook or Twitter, just like, share, and retweet. We always appreciate that. If you guys want to trade on the exchange that we're trading on, we typically do all of our day trading and our intraday trading on Bybit. If you guys would like to sign up, you get a pretty sweet bonus. I think it's like up to almost $1,000 right now, but you got to do some certain stuff for that. You do get like $300 pretty much risk-free if you deposit a little bit of BTC. Bybit.crackingcryptocurrency.com. Link is down in the description below. Thank you guys so much. All right, let's get over into the charts and let's start breaking some stuff down. All right, driving through the gated residentials. Let's get comfy here. All right, good morning, everybody. Okay. All right. All right, let's give some shout outs to B-Flow, Jose Alves, Eth1, Sneaks123, member of the YouTube channel. Thank you so much. Don Candon, Fetty Turkel, good to see you guys. All right, hopefully I pronounced that right. Please correct me if I pronounced that incorrectly. All right, so starting off as we do on the weekly time frame, not the best thing that we want to see here, honestly. We do kind of see this weekly gravestone doji playing out. Again, we were taught, just the recap as we always do. The pattern that we've noticed in BTC is after a cycle high, the correction down to the 55 weekly EMA, followed by a bounce, followed by the correction down to the 100 weekly EMA, followed by a bounce, and then ultimately a correction down to the 200 weekly moving average, where we actually find our bottom. That's our high value area, the the truck up area, if you would. And that always, that's just what Bitcoin's done since 2015. All right, really 2015. So that's the thesis that we're going on. That's our macro thesis here. So we've already seen after the cycle high was reached, we saw the correction down to the 55, the bounce actually putting a slightly higher high. And now we're seeing the correction down to the 100. Now, two possible things could happen here. One, the bounce continues. We just get this little bit of a pullback. We maintain support on the lower time frames. And we'll see that here when we go to like the 3-hour chart. We'll see where the volume nodes are. Or that this weekly gravestone doji plays out. Remember, a weekly gravestone doji is a bearish reversal sign for candlestick patterns. So we are kind of seeing that play out. Actually hitting our initial targets of about $45,000 when we scooped up off the bottom. We did play this trade, this bounce right here, bought at the 100 weekly moving average, and we were looking for $47,000, and that did happen. So that's a risk-free, no-loss position for us. We already took 50% off the position. Stop losses are at break even on that. And now we're starting to see this weekly doji play out. Doesn't mean it's absolutely going to plummet and collapse down to the 200 weekly moving average just immediately. But the farther we dip down, the more likely that becomes. And again, I pointed this out yesterday, but the worst, I don't say it's the worst case scenario. What would probably be the most drudgerous thing, like the most painful thing, is not just Bitcoin's price collapsing immediately, but if we repeat what we did back here in 2018 after reaching the 100 weekly EMA, where we just consolidated for a long period of time, and the hopium was smoked so deeply, in the echo chambers of the Bitcoin subreddits and the Bitcoin YouTube channels and the Bitcoin Discord channels. It was really mostly Telegram back then. It's only over the last couple of years that Discord's really blown up with communication for Bitcoin, and crypto in general. But this was a painful area of the market to be in for individuals who are extremely long biased, and that made this absolute collapse to 3K even more painful. So if we do go sideways for a long period of time, even though I do like to see, obviously sideways is good, it's signs of accumulation, but it doesn't necessarily mean that the bottom is in. All right, so that's the hypothesis we're working with here. So again, we talked about this. Weekly hedges are fine. You can do this in the form of actual futures contracts. You could also get some Bitcoin put options and just protect your Bitcoin stack. All right, you can, well, not really your Bitcoin stack, but the dollar value of your Bitcoin stack is essentially what you can do. So you can open up some long-term future shorts and essentially look to close those out around $20,000 to $25,000. And you can have invalidation. Let's say if we close a weekly candle back above the weekly 55 exponential moving average here. All right. And keep in mind that when you do that, if you do it properly, okay, if you are holding Bitcoin, if you're holding spot Bitcoin, and then you use futures, whether they're the perpetuals, which is slightly more complicated, or just the regular futures contracts that Bybit now has. If your position is margined in BTC and you're holding BTC, that means you're long on BTC. Holding Bitcoin means you're long, right? Whenever you hold an asset that can go up and down, it means you're long. Whenever you're not in dollars or stable coins, you're long, okay? So hedging that, all right, hedging your bets means that you would go into a future short position, and what that means is since your holdings are in Bitcoin, your profit and loss will also be in Bitcoin. But because you're already holding Bitcoin and you're already long, if you go short just the dollar value of your Bitcoin whenever you open up the position, so let's say you have $10,000 in Bitcoin. So if you go and open up a $10,000 short, you're essentially neutral on price, meaning that no matter where price goes, except assuming if you use leverage, if your position gets liquidated, you will not lose the dollar value of your position. So if you have $10,000 in Bitcoin and you go open up a future short position for $10,000, right? If price goes down, okay, you will earn Bitcoin, but the dollar value of your position will remain the same, which is good because if price then goes down, let's say to 20,000, you close out your position, you still have $10,000, worth of Bitcoin, which is great, but you now have more BTC. You have a greater quantity of Bitcoin, which means that then when price appreciates, you're going to make much more money than if you would have just held your $10,000 in Bitcoin. Price goes down. Now you have less. You have, let's say you have $10,000 of Bitcoin right now and Bitcoin's price goes down to 20,000. Let's just call that a 50% drop. You're going to have $5,000 of the Bitcoin. You're going to have the same quantity of Bitcoin, but it'll only be worth $5,000 and it won't be worth $10,000 until price rallies 100% back up to your current price. Whereas if you hedge with a future short, not only do you still have $10,000 when price goes down, but now you have more Bitcoin when you actually close your position out, which means that by the time Bitcoin goes back up, if Bitcoin goes from here to here, all right, you will have $20,000 instead of just recouping your initial investment of $10,000. So very important, tricky to do. A lot of people get this wrong, but I think hedging, the best way to hedge is on the higher time frames and to be patient, knowing that these things are going to take months, weeks, if not months to play out. So if you do not have the discipline to hold a position for weeks or months, then hedging really isn't for you. And you should just stick to the daily time frame or, God forbid, the lower time frames as well, which, hey, we're going to be losing some money today on, so it's all good. So we did see, of course, we saw the weekly time transformation signal coinciding with that drive down to the 100 weekly moving average. So overall, things are good. We still have that buy signal. We don't have the weekly cross under yet. So that signal time transformation has not yet told us to get short again on the weekly time frames. The only way to be short on the weekly time frames here is just off the gravestone doji and just kind of this rejection. All right. Now, I don't want to move too fast into this. But this is starting to look, the more I look at this, and the more if price continues to play out like this, the more it's going to start to look like we're going to go sideways here for a little bit. And again, remember, with few exceptions, right? Well, actually got to kind of have a mixed bag, right? So we can see back in 2018, price dips down to the 100, bounces immediately, and then the consolidation led to a breakdown. All right, over here in 2019, in November, when we pushed down, price consolidated sideways and then pushed up. But keep in mind, November is often one of the best months for cryptocurrency historically. So I'm not sure what to make of that in that sense. All right, so this is going to be, let's actually go back and look. Yeah, and back in 2014, when we collapsed to the 100 weekly moving average, we did move sideways, not a significant bounce, and then we did collapse down to the 200 weekly moving average. So 2 instances of consolidation at the 100 weekly moving average leading to declines, and only 1 example of it leading to a bounce. And we have to keep in mind that one time it did bounce after consolidation was during November, which is always a good month, whereas generally the beginning of the year is not great for Bitcoin. Okay, so that's the scenario that we're currently working on. Let's go down to the daily and see what we've got going on today. All right. Yesterday I took another daily long position off the reversal baseline bounce. So far, have not gotten have not gotten any follow through on that I wanted to. All right. So it's been hard out there for the longs. Okay. But that's the strategy. That's what we do. The reversal baseline bounce is essentially an opportunity to get back into the dominant trend. It's a pullback entry. So when we see price break the daily baseline and we see our indicators go bullish, and then price reverts back essentially to the mean price here, to the baseline, we look to get long with our regular ATR take profit targets. So we've actually dipped a little bit below that, but we were looking at profit targets like 42,000 and invalidation around $37,000. So if price does end up closing down below here, we'll go ahead and close that position out. I don't really want to sit through the dip. So we do have volume support right here coming around 38,500, which is just the top of the range right here. So if we close here, I will be out. I'll let this happen and then see if we actually do get a bounce off of this volume node. However, at that point in time, and if at the daily close, I'm going to have to consider opening up a daily short. As for the strategy, we see Parallax here is actually turned under. We can see that we've topped below 0 here with a fresh cross under today if this daily closes like this. So overall, the daily is just starting to not look as constructive and bullish as we wanted it to, and we're just not getting those bounces that we wanted here. On the 3-hour time frame, the super duper DEMA strategy had our back here. Also, I just wanted to point this out. I need to make an announcement in the Discord, but yesterday, I noticed after doing the show, I noticed that the super duper DEMA alerts for Bitcoin and Ethereum had not been going through to the Discord. All right. Now, obviously, the indicators that the premium members have access to works, and all the automated alerts that they could set work just fine. But the alerts were not going through to Discord. So I did just fix that this morning. I spent a couple hours last night trying to figure out exactly what was wrong with it. And then I slept, had a eureka moment, realized what I needed to do. So it's all fixed up. The signals are now going to Discord. Interestingly enough, and this is just programming for you, but the Bybit altcoin signals for both long and short worked perfectly fine, and on paper should have required the fix that I applied to the Bitcoin and Ethereum code, but you know, if it ain't broke, don't fix it. So those signals have been going through just fine, so nothing really to do there. Okay, yeah, so 3-hour time frame right here. Sorry, let's zoom out here just a little bit. Okay, as we said, 3-hour time frame. We did not get that. So yesterday, when price actually fell below the volume node, so when price moved into this low volume node, I said what was likely going to happen was a pullback and then continuation down. We didn't even get that pullback, right? So we've got a volume node. We saw a lot of volume transacted here, but price is close to completing that movement down here to the 38,900 here, where we have a little bit more support. But on the daily time frame, we saw that was at the 38,500, right? So pretty decent range, 38 to 3,500, kind of the area to start that you could potentially start to look for picking up longs here, because we are just traveling through this low volume node right now. So holding the 3-hour short position right now. And yeah, well, I do want to point out that we do have a little bit of divergence here on the 3-hour time frame. So we'll see what happens. It's looking like that's not going to play out because price hasn't really responded to it. And we did get some significant buys here, right? This 3-hour candle particularly. And this Darth Maul candle, but price is just not moving to the upside. So we can see that divergence play right here. Time transformation is beginning to move up and give multiple buy signals on the 3-hour time frame, while price is moving down. So interesting to see how that plays out. Again, I'm not seeing the reaction that I really want to see from that, and with the fact that we've got this all the rest of this low volume node to travel through, which is like another 3% correction here. Got to be a little cautious. Down here on the lower time frames, we can see we did see some buying come in here, and we did actually see what was cool to see. We'll see this on the V Wap double bounce strategy here in just a little bit. We did actually see some divergence, right? Especially on the 15-minute time frame, we saw divergence here throughout this area. And again, here's more granular. Here's those big buys I was talking about. We had some nice buys here. We had some nice buys here, but we haven't been able to actually flip and actually price appreciate above this. Now, it is possible that we just continue to move sideways here for a little bit, but if we start going lower, then it's going to look like we're going to take out these lows, and if that happens, we're most likely going to complete that 3-hour low volume node transfer right here, all the way down here to the 38,500, 38,800 is kind of where that node starts. But we can see here that real support's at 38,500 right there. And you just get tired of catching a falling knife after a while. So we'll see. We'll see here on the 15-minute time frame. Now, I guess a good thing is if we stay here and hold, and these remain the lows, then that could be better. We do see that the 50 and the 200 exponential moving average on the 5-minute time frame got pretty close right here. We just haven't been able to break above that level of resistance. So we'll see what happens here. Now, moving over to the V Wap double bounce strategy, pretty good. I've been working on this. I want to get this published and out to the premium members so they can start using this. So I've got a couple of versions of it coded up now. I do have the study version. This is the indicator version. And the way the strategy works is pretty neat. So you can see we got an active trade right now. But what happens is it uses V Wap and 2 standard deviations of V Wap. So we've got the blue line is V Wap, which is volume weighted average price. And then we've got the first set of orange lines, which is 1 standard deviation away from V Wap, and then the second set of orange lines here, which is 2 standard deviations away from V Wap. And I want to give a big shout out to Cavano Trades. He really helped me with this script. I did end up plugging in the divergence, so there's a couple aspects to this. Essentially, for this strategy, we are looking for price to trade below the low. If we're looking for longs, this is a reversal strategy, or reversion of the mean strategy. So we want price to be trading below. Here it is. We want price to trade below the lower lip, or below 2 standard deviations away from the VWAP. And then we want to see bullish divergence on the QQE mod, which is the indicator that I've paired this with. And then we want to see a green Heikin-Ashi bar. All right, so we can see right here, we can see a trade entry. And what I want to code into this is because I'm not having, in the back tests, I'm not having the best results with fixed stop losses and take profits. So what I think I need to do, and I often run into this issue on lower time frames. So what I need to do is just add quite a bit more code to this and add in some exit indicators because we already have one rule for entry. So the one rule being price trading below the lower boundary, the second rule being the divergence, and potentially I'm gonna see if I have more results throwing in a baseline filter here, but I think I'm gonna want the baseline filter potentially on a higher time frame per se. But we'll see. I need to do some experimentation with that. But overall, the strategy, so I've had good results trading this manually. So we can see here is a long entry right here. Price did push up, and it just kind of depends on how you want to do this. This was originally, I envisioned this as a scalping strategy, but it certainly can help you catch tops and bottoms. I mean, the divergence is such a powerful tool to use. And you know, what sucks, and so is V Wap, right? And the 2 standard deviation bands, you can see that for the most part, price does like to stay around V Wap, right? And now there will be days in the market where we get extreme deviations. So like yesterday was a good example. Yeah, right here, where we can just see price fall and fall and fall and fall and fall, and we can see it stays. But you can see here, interestingly enough, though, it stays between 2 and 1 deviation away from V Wap. Doesn't really like to move farther down from that. But for the most part, this is an excellent tool, especially on ranging days. It just gets you fantastic entries because price typically stays within that V Wap envelope. So a little bit more work to do on this one, and then we'll publish this not only as an indicator and strategy tester for all the premium members, excuse me, but also as a automated signal alert system. So yeah, so V Wap double bounce strategy does have us long here. We've got invalidation right down here, and we've got our take profit target right up here. And I wanted to point out that divergence. Here we go. So here's the 15-minute time frame, and we can see that divergence right here. So we can see the price is making lower lows here, and the QQE mod here is making higher lows. All right, so we'll see if this plays out in a significant way. If it does play out, again, we're going to be looking for price to break above the V Wap and maybe come up here and test the upper boundaries, which means we can get back up to the high 40,000s. And we can see the order book getting pretty bullish right now. We can see that there is a bid wall that is moving up. Why choose only one? All right, we've got, let's see here. Shout outs to Ron Legato, Gravy, Grits and Green, Andrew Munns. Cavano Trades in the house himself. Let's see. B-Flow System says full short. He's open for 34.5. Let's see. Jose Alves says, is there an advantage in hedging versus selling the full BTC position into USDT? You know, I've talked about this a lot, and I think it's psychological. The problem, you know, and this is something that all traders kind of struggle with, particularly in Bitcoin, you know, because I think it's as simple as the fact that you hate to miss out on a move, right? You know, so many traders experience that feeling where as soon as they sell, price goes up, or as soon as they buy, price goes down. And that, you know, over time, as you trade more, that will happen less, right? If you just have to stay in the market and you have to learn, you know, you have to develop a strategy, you have to execute on the strategy. And if you're trading discretionarily, you're going to make more mistakes than if you're just trading with a system. But if you just continue to trade, more often than not, you will learn how to avoid that occurring, right? Buying tops and selling lows. So if you're holding Bitcoin and you're thinking to yourself, okay, well, you know, Bitcoin might drop 50%. So the problem is, you should sell, right? It sounds very logical. But the problem with that is, once you sell, right, it becomes very difficult to then buy the low, right? It becomes very difficult to then buy the low. Just a second here, guys. Okay. Sorry, what was I saying? If you commit to selling your Bitcoin and then price drops 50%, I find it unlikely that you're actually going to buy back in, right? Whereas, because it's a commitment, you have to do something actively. You have to go from like locking in a position. You're out. You're holding cash, right? And assuming you don't like blow that cash in between now and when the dip happens, if you then get to the point where the market dips, it's a lot harder than you think to buy back in. When you've seen something collapse like 80%, it's just really hard to buy it. It's really hard to do that psychologically. So if you're holding Bitcoin and you've been holding Bitcoin for a while, obviously, like, that's very important, right? There's this concept called time in the market versus timing the market, right? So if you're able to find an asset that you think is valuable and you hold on to it for the long run, you're typically going to get good returns. Okay. It doesn't really matter when you buy. It just matters that you buy and you consistently buy and you just let the market do what it does, which is generally go up, right? Stonks only go up. Now, that's why it's a lot easier, in my opinion, to hedge rather than sell, because you're not actually selling your Bitcoin. You're holding on to your Bitcoin, and all you're doing is opening up a position on it, right? So when the time comes, when the dip happens, all you have to do is you don't have to commit to buying again. You already have Bitcoin. You just have to close your position out, accept your reward, and move on with your life. Man, we got some rough times in the chat today. Yeah, it's on DLive, so I can't delete the comments. Well, I can on DLive, but they'll still show up here in YouTube. Let me see what I can do, though. There we go. There we go. I will change it to followers for at least a day. Okay, back to the comments. Let's see here. Okay. Gravy Gets in Green says, Crown says the order book is meaningless because any bid can be pulled until it's filled. Your thoughts, sir? Bennett's actually talked about this a lot. On a first level, I think that's true, because what you're talking about is the concept of spoofing, like spoofing the order book, just flashing orders on and off, and that can make order flow following difficult, especially for the beginner. However, I know a lot of traders that trade order flow. I look at order flow, especially when I'm on the lower time frames. So there are, like, I'm certainly not the expert on this, but Bennett's done a lot of material on SOS, or what he calls signs of spoofing, that you can use with, like, Bookmap, for example, or that you can use just in your own analysis and looking at the charts, looking at the markets, so that you can figure out or try to the best of your ability to determine what are signs of spoofing, and then certain strategies around that, right? So if you're seeing signs of spoofing, that's something that's a pattern that's repeatable, and you can develop a tradable strategy around that concept. So yes, I do agree with Crown, However, I also think that there's more to it than just saying that because this is manipulated, because this data is able to be manipulated, it's not viable, right? So if you know that data is going to be manipulated, just like price action, you start to look for patterns in that manipulation, right? What does this mean when I see that? Let's see here. Bitpanda asks if I use Elliott theory in my trading. I do not. I do use Wyckoff theory, though. Yesterday, I talked about volume signaling the start and end of trends. I've been trying to call a bottom the whole way down here, and that info has kept me safe for not entering thus far. Okay, yeah, good. Yeah, volume's very important, man. You see volume come in at the end and the beginning of trends. F1 says, when everyone says short, just go long. Psychologically, you will see it's reversible every time you think is not right. Yeah. Mr. Ether buys the most when there's an 80% drop. Cavano trades, loves buying into huge red dips, only on quality crypto or stocks, though. But it very much feels like catching falling knives and usually takes a long time to get in the green. Yeah, indeed. You know, this is why we always start off. We don't teach people, especially our beginners with the Pathways to Profit course. We don't teach them to do reversal trading. Okay, we teach them to follow the trend, right, and to spot signs of potential trend beginning and trend continuation. Those are the easiest things to identify. It's the easiest way to trade, and it's the easiest way to build a sustainably profitable system. When you start doing stuff like what we're doing on the stream, like for example, like trading lower time frames and looking for entries, this, that, and the third. It's a lot more difficult. Peckham08, hello, sir. He bought the Litecoin dip at $116. I think that green candle on the 1 hour was mine last night. Don Cannon bought Palantir for $10.75. And Redco asks, which alt is the best to hold during the dip? Well, probably a stable coin. You got a lot of options, right? You know, if you want to trade, then Tether is the best stable coin to hold. You know, I know that there's some, well, you know, and you got to be, yeah, I think the best, if you're going to stable coin up, I think the best thing to do is diversify your risk a little bit, right? Because honestly, if you want to trade, you kind of have to use Tether, right, on the major exchanges. You know, like Bybit, for example, like, you know, all the contracts are margined in USDT, which is absolutely fantastic because on the USDT contracts, there's hedge mode, so you can be both long and short simultaneously. It's absolutely wonderful. You do have to disable that if you want to automate a USDT strategy with 3 commas, for example. 3 comma strategies won't work if you don't disable hedge mode, which you can do from the right-hand side of the screen on Bybit. But yeah, so you've got USDT, and then, you know, probably the biggest one of the safest ones to hold is going to be DAI. PAX, USDC has been my go-to. USDC is one of my go-tos in the altcoin world. You know, it's backed by Circle. They're regulated, all as well. DAI is really good too. It's, you know, the most popular algorithmic stablecoin out there that is backed by Ethereum reserves. But there's a lot of exciting things happening on like the Luna network, right? So UST is really cool to hold, and you can do a lot of stuff with it. You can stake it, and if you go the USDC DAI and UST route, you can actually earn quite a bit of yield on your stable coins through various platforms on the different layer 1 ecosystems, whether that's Ethereum, which is generally too expensive for most for most of us anyways, but you've got Phantom, you've got the Kronos network, and you've got Avalanche. A lot of cool things happening over there. Andrew, what's up, man? You're like, damn, Don, that thing has been in free fall. And then Don Cannon gives you 5 seconds of DD. He's like, they just had good earnings. And you're like, yeah, okay. Looks like it's good support. So you guys got a lot. You know, I love you guys. You guys got a lot of good free time. All right. So let's check in with Crypto Bubbles. All right, Neo, the one. up 10% today. And Safe Moon V2 up 6.4%. We also got Hollow Token, one of my old, I made a lot of, I guess I don't like saying that. That sounds like braggy, but, if you guys have been following me for a while, you guys know that Hollow was one of my biggest trades back in 2019. But pretty much everything still down for the day. Let's check and see. Yeah, over the last hour, we're starting to get a little bit of movement, but really not very much. The last 15 minutes, we're starting to see a little bit of bullishness, which makes sense. Bitcoin's moving up. Keep that in mind. On the weekly, we've now given back most of our weekly gains, so it's been a bloody couple of days for altcoins. Let's check in here. So here on the 30-minute chart, again, we can kind of see that volume start to come in here. Funding is still positive. It's dropped down a little bit, which means that that the longs aren't being as super bullish here, that retail traders are being as super bullish, which could be a good sign. We do have a nice drop in open interest here. Open interest did rise here as funding was high, which is kind of good to see. Let's go down to the 1 minute. Looking for, yeah, so shorts are kind of getting smoked here. We can see that drop in open interest. Nice rise in open interest at this area. Still got lower highs though. But we'll see what can happen right here. I like this down spike. Again, here's goodbye here. Big down spike. And now we're back up in that range. So we really do need to hold essentially this level as support. 39,740. Now we're back above 40,000. So I guess the real test is, as you can see here, so we've got these lows right here just around 40,000 that was acting as support. And then we broke that. Back above, broke, back above. And what we really need to do is we need to convincingly get back above 40,000 and instead of breaking back down, hold it as support. We're not going to get any significant price appreciation until that happens. So it's a massive, I do like to see this though. Massive liquidations here, massive long liquidations here. Yeah, we smoked like what? Well, there was a 6% drop in open interest. We went from 20.92 thousand Bitcoin down to 19,000. Yeah, that was a huge. This right here was a massive liquidation candle all throughout here. Don Camden, are you making fun of my portfolio, dude? XRP to the moon, baby. All right, let's check back in here. We are at the 50 EMA here on the 5-minute time frame and getting a rejection from it currently. Keep in mind, again, I pointed this out earlier in the stream, right? We did have some volume step in right around here, and we do have this drop here, at this 3 to 4% drop. But we are seeing that 3-hour divergence on time transformation. So that, if that plays out, maybe then we'll actually get our, maybe a 3% bounce up here to the 41,400, 41,800 that I was talking about yesterday. And that would be your reentry opportunity if you wanted to get on the short side of things. Looking at the super duper edema on the daily, you got to have a large stop loss range inverse moon. Bitpanda asks if I can explain the open interest indicator and what it implies about short and long positions. Yeah, so open interest is the amount of positions or contracts that are open, right? So, contracts are measured in, so one contract equals $1 or one contract equals one tether on the USDT margin contracts. So there's always, so there's a couple concepts here. One is market order flow. All right. So you have to understand how price is moved. Price is only moved when, over here on the order, so above me, you can see the order book, for example, and you can see on the, on the left, right up there. So right here is market order flow. So these are all the market orders that are being executed against limit orders. Market orders act against limit orders. That's it. Limit orders never execute against other limit orders, and market orders never execute against other market orders. Market orders only execute against limit orders, and limit orders can only be executed upon by market orders. Right here, you'll see the order book, the buy side order book, the bids. So this is all the resting limit orders that are at or below price. And this right here is all the asks. So all the limit orders that are above price. So sell walls, buy walls, what people are actually doing about those walls. So the market is only moved by market orders. You have to have a market order to move price. So when open interest rises, that means that market orders are executing. It means that limit orders are being filled and the positions are being, positions are being opened when open interest is rising. So if you go and long one contract of BTCUSDT or BTCUSD, open interest will raise by 1, let's say. It is actually calculated in Bitcoin. So because exchanges love to confuse you, it is calculated in Bitcoin for the USDT contract, but it's calculated in USD on the BTCUSD contract. So if you're margined in Bitcoin, it's calculated in dollars. If you're margined in Tether, it's calculated in Bitcoin, just so that you don't know what the fuck's going on. But if you can figure out what the fuck's going on, it can help you. So back over here, when we see open interest rising, we know that people are adding to their positions or opening up new positions. When we see open interest falling, that means that people are closing out their positions. And when we see open interest fall very quickly, it means that a lot of people or a lot of positions are being closed. And that usually happens in certain areas where there's a lot of stop losses and where there's a lot of liquidations. And typically, when you see a lot of stop losses or liquidations, the market reverses because that was an area where there's a lot of liquidity, and the market moves from liquidity area to liquidity area, from one liquidation to the other, from one stop loss to the other, so that they can actually move price. You need liquidity to move price. You need a lot of market orders to move price a lot, and everybody wants price to move a lot. So there's a lot of strategies around open interest, and I'm not the greatest expert. Again, Bennett's got some amazing videos. I'd definitely go check those out. But I do know quite a bit, and I do use it in my own trading. So typically, the easiest way to use open interest is if you're scalping. So what you're essentially looking for is you're looking for very quick, very fast, very sharp drops in open interest, right? So this would have been a good example, right? When you see a big drop, like 1% or more. So right here, we can see on starting here, and we can see this down movement right here. So let's zoom in here a little bit. Okay. All right. So right around here, okay, from this candle to this candle, and you can see a lot of volume. Volume's good. But between those two candles, we see open interest drop 2%. That's a big drop in open interest. All right. Now the market did move down a little bit more, but then it just put an absolute blast to the upside, like a 3% move to the upside. So if you're looking to take short-term biased trades, then looking for a high quality setup like this is really good, where you see a very sharp drop in open interest very quickly. Especially if it coincides with volume. You don't have to like immediately enter right after there. Like for example, like if you're using an indicator, you could wait for like a crossover, for example. Let's say you're using the stochastic, which is a pretty terrible indicator, but you get a stochastic cross probably somewhere around here, or you wait for an MA cross or something like that. But that's going to occur somewhere around here and let you know to get into this trade. But the open interest drop just lets you know to start paying attention. All right, and so very similar, again, as price is moving up, what do we see here? We see a very sharp drop in open interest continue, so a lot of shorts are getting liquidated, and the market moves the other way. Yeah, so here's another good example here. Price is moving down. We see open interest drop a lot from here to here, and although the market does make another little dip down, here's another huge drop in open interest right here. So between here and here, so maybe individuals got long after seeing this drop in open interest, or just for whatever reason. Most people aren't looking at open interest, so Be pretty sure you're in the 1% of the 1% if you're looking at it. And then right here, we see another 2% drop in open interest right here on this maneuver. And what happens? Price reverses. Here's another good example. Price drops, right? Open interest drops, a lot of stop losses, and price does move down one more time, but price moves up. So that's one way to use open interest to spot entries. Another way to use open interest is if you see open interest rising, you want to be generally trading in the direction in which price is moving. So let's say that price is moving up, which it is right now, and we can see open interest rising. That's generally indicative of strength to the trend. That means that longs are continuing to open up positions and they're not closing out their positions. So shorts aren't getting liquidated yet, or they're moving their stop losses higher and higher. And if the shorts aren't closing out, then the market is likely going to continue higher until it stops all the shorts out. That's a very Machiavellian view of the markets, but it's true. On the lower time frames, price definitely moves from liquidation zone to liquidation zone. It's one way to trade. It's not the only way to trade, but it is certainly one way to trade. And being armed with those tools is good. Now you can add funding into this concept as well. So that's what this is right here. Funding is what's above here. So we can see when funding is positive or negative. Now, typically when funding is negative, it means, so funding, means that shorts, if funding is negative, it means that shorts are paying longs for the privilege of holding the counterparty risk to their position. So for you to be short one contract on a perpetual exchange account, hey, Alex, good to see you in the chat, man. If you are short one contract on any perpetual swap exchange, so this is going to be BitMEX, this is going to be FTX, this is going to be Binance, and this is going to be Bybit. You have to pay your counterparty so that not only can price, funding is used to keep price in line with, or to keep the mark price of the contract in line with the index price, which is what it's based on. So yeah, if futures price is over spot, longs pay shorts. If futures price is under spot, shorts pay longs, right? And what you'll typically see is the more mark price, or the price of the contract, right? The price of the futures contract that we're trading, the more it diverges away from price, that implies that traders are taking on more risk in that direction. So if funding is increasing, it means that the mark price is deviating away or deviating above. Let's say in this case, in this example, funding is positive. If funding is continuing to get higher and higher, that means their longs are taking more risk. They're opening up more positions and they're using more leverage, right? So while there is an equal amount of longs and shorts always, it doesn't mean there's an equal amount of long and short traders. And it doesn't mean there's an equal amount of long and short leverage. So if funding is continuing to rise and price is going up, it means that longs are taking more and more risk and putting on more positions. Similar if funding is negative. So some strategies around utilizing funding is typically to look for bottoms around the time that funding goes negative, because that typically means if funding goes negative, then that typically means, especially on a higher time frame, it typically means that shorts have taken on a lot of risk, and that's usually retail traders, and they're usually on the wrong side of the trade. So while retail traders are utilizing a lot of market orders and getting market orders filled, generally smart money is going to be putting their limit orders in the books and waiting for those market orders to fire and fill their orders. Yeah, as Alex says here, he says funding is easy. Funding pegs the futures contract to the spot price. If futures price is over spot, longs pay shorts. If futures is below spot, shorts pay longs. These market forces peg the futures price to the spot price. More extended, higher funding. Exactly. Now, I will say this, as with all things, especially with Bitcoin. And again, I don't know if this is just by nature of it being a generally mostly appreciating asset, or if it's, I think that's the only reason that I have, is that Bitcoin on average just goes up. And then when it rallies very irrationally. But, so, okay, 2 points to this. Bottom signals. So for, like, let's take the RSI, right? When the RSI goes overbought, the classic approach to that is to sell and to consider price overbought. But when you apply like the daily RSI to Bitcoin, typically when RSI gets overbought and Bitcoin's rallying, like that is the worst time to sell. We typically just keep smoking on. However, when RSI is oversold, typically that's close to a bottom. All right. And that's the same with the Fisher Transform. That's the same with the Stochastic. That's the same with the MACD. It's the same with almost any momentum oscillator that goes overbought or oversold with Bitcoin and most other cryptos, right? You want to be a little cautious about selling when it's overbought, but you can be a little bit more confident in buying in oversold areas. So because of that, when sometimes or often negative funding can be seen as a pretty good bottom signal. So if price has been going down and then funding finally flips negative, it's typically indicative that we're close to a bottom. At least that's what history has shown out. However, not all the time, if price is moving up and funding is very high, doesn't mean that the end is in sight. It just means that that's the price of doing business. Somebody asked if the open interest indicator was free. This is not TradingView I'm on. I'm on CoinGlass, so coinglass.com, and it is completely free to use. You can also use Coinalyze. Yep. And let's go to Bitcoin. Here we go. So Coinalyze has aggregated open interest. But if we go to Bybit, BTCUSDT perp, there we go. And we can get directly to the BTCUSDT open interest here. And I actually like the way that Coinalyze shows the open interest because it shows the open interest as candles. Whereas on CoinGlass, it just shows it as a line. So for some reason, it's just my brain works better with candles. Bring it on, Alex. Drop us with some of that hot alpha. Say what, Don Camden? Show me. Open interest Klein. You're right. No longer be using the line version of open interest. You've changed my life, sir. You've changed my life, Don Cannon. As you often do. All right, Alex says, check out 0xDAO. I have some 0xDAO. Let's go to Deck Screener somewhere. Yeah, it's OXD, isn't it? Yeah. Okay. It says, first of all, great placement for a position, consolidation near the lows. But most importantly, there are some very big fundamental catalysts coming soon. Link to the Medium article here, which I will check out. The highlight is if you burn your tokens before launch, you get the same yield that partner protocols do. Yeah, you know, this looks like, I mean, most of the altcoins right now, which is actually pretty good. So Luna is something I'm in a position on. And we can see that we've tried basically to flip the point of control. We've been above it for a little bit, and we're just kind of decreasing back below it. But again, we're finding support right at that previous support and this nice kind of overall consolidation or sideways movement after lows, which we haven't seen, right? Like if we look at how Luna has moved down, it's just been pretty much, you know, elevator down. So sideways consolidation is always good to see. So people are going to be incentivized to be buying and burning this token. Yeah, if they burn it, they can't sell it. So that's good. Bitpanda says, I saw a tweet, Fed Reserve staff ban trading Bitcoin, negative wave narrative upcoming. Hey, David Rice, good to see you, my friend. No, I don't think they're going to make cryptocurrency illegal. In fact, yeah, even so, Gary Gensler is the chair, and he said that while so one of the negative catalysts that we've had over the last few days is that he absolutely refused to approve the Bitcoin spot ETF, which sucks. Bitcoin spot ETF would be absolutely fantastic for price, but he did say that they would not go so far as banning Bitcoin. The only thing that's kind of uncertain is whatever this regulation, we just, but not a big fan of government, right? So obviously we've got Joe Biden's crypto regulation that's supposed to be coming next week, and I don't know. I just expect it to be a little heavy-handed. Let's see here. Let the new alt season commence. So is Ethereum... You said that thank you, Bitpanda. It is a matcha green tea latte. I can't drink coffee anymore, man. It just messes me up. Looks like people are watching the show, man. There's your 0x Dow buy. Look at that. That's 11% in just a couple minutes. Yeah, man. You got the dog indicator. Rest my case. Your Honor, I hold in my hand I am going to... All right, guys, I've been going for an hour, so I'm going to take a brief break. Let me get some music on. Let me know if you guys can hear that. And... yes, please. Proceed with the education. All right, I will be right back, guys. Alex, I know you got this. All right. I see that not everything has gone to hell while I've been gone. That's always good. Let's check back in with Bitcoin. I think we need the I don't have the memes here. I do not have the memes here. All right, let's see here. Alex81SG says, I'm going to get rid of all my shit coins and yield farm like a maniac for the next month. I think Alex would tell you not to do that. Can we have an update on your NFT purchases? So the only thing that I've bought NFT wise was the UFC Strike Zone. I did that live. I got an NBA Top Shot pack this morning. Let's see if I can actually pull that up. A second, let me get logged into Dapper here. Okay, let's see here. It is not. think their website's broken because it's not like it's not letting me see my starter pack that I got this morning. But other than that, no NFT updates. What do I know about the NBA? I'm like 5 feet tall. I like the Denver Nuggets, man. It's a recent affliction. I was never much into sports. Yeah, Tapper exits game. I was never very much in. Well, I've always liked combat sports, and I roll jiu-jitsu, but never really watched basketball or football until I got with my partner. She's a big football fan, so it's been fun. Actually, big Packers fan, so we're a big Packers house now, and and then my partner's son is a big basketball fan, so that's been pretty cool actually. We went to a Denver Nuggets game, and I don't know, I just got hooked. Now we go play basketball, and I like watching basketball, and it's pretty fun. Any word? Grew up in Colorado. Was a big Nugget and Broncos fan in the 80s. Heck yeah. Yeah, we don't say girlfriend anymore. We say partner. That's 2022, people. No helmets. You play rugby. No helmets, just balls. All right, let's see here. Neo's still up pretty good. Let's go check in. Let's go take a look at Neo. ENS and EWT still in buy zones right here. Those are two I've got my eye on. Here's EWT. And Neo. You know, I do like hockey. I like watching it live. I got into hockey when I was back in Iowa, and I would go watch the Ames team live. Yeah, it's pretty good pullback on Neo right here. This nice volume node. Thanks for the subscriptions, guys. I appreciate that. $14.50 entertainment, and I can't actually pronounce the other new subscriber. Only watch. Yeah, I mean, you got to watch UFC. And that's, I just got, no, I didn't. Sorry. I got Francis Ngannou. I got a good knockout in my UFC Strike Zone NFT. But I can't remember who it was. Somebody on stream said they got tied to Ivasa, knocking out Daryl Lewis, that was a good fight. We just watched that. Was it last week? Yeah, last weekend. Yeah, Saturday. We had Saturday, yeah, because we had the UFC fight on Saturday, Tai Tuivasa and Darrell Lewis, and then the Super Bowl. I saw the Rams win. That was a good game, man. Good to see you, Alex. Thanks for stopping in, my brother. We are working on it, my friend. Yep. That was a good opportunity there on Neo. 2% right there. Growing out of sports like I did Vidya. You know, I remember who was it that said alcohol is the opiate of the masses? It's Karl Marx, right? Yeah, Karl Marx said alcohol is the opiate of the masses. I wonder if it's sports. Sports is the opiate of the masses, but you know, sports is different because it's challenging, it's entertaining. I like cryptocurrency trading. Hey, Jordan Stotts, good to see you, man. I don't drink. Maybe that's why I'm slowly becoming a Marxist. All right, let's check in with our automated strategies. Yesterday we had 10 wins in a row for the Super Duper DEMA strategy. And let's see here. So far today on the 18th, we've had 1, 2, 3 new signals for Bybit sell signals for Bybit altcoins, and one winning trade. So we did have a winning loop ring trade here. So let's bust open. So here's February 18th, and we had a new signal for LRC. It hit almost immediately, and the new short signals on IOTX and Shiba Inu. And we can see here that the long only strategy had 4 losses yesterday, 4 losses yesterday. And again, I just want to remind individuals that I have fixed the Super Duper DEMA signals here for Ethereum and Bitcoin. So they weren't going through for some reason. Well, I know why, but they're fixed now. All right, bottom feeder bot. Did we get any signals today? Nope, just a bottom signal on XRP/USD yesterday and IOST about a week ago. Check in with our Rectosaur bot, see if we got anything happening. Yep, yesterday we just had a lot of long liquidations at 8.69 million. Yeah, I will agree. Chemozabi and Chili Lime. Leverage trading is definitely a different animal. I mean, it's what I do, but it's different. You know, there's a couple, I think there's a couple different ways to trade successfully in cryptocurrency. So you've got spot trading. So this is where you're just buying the underlying spot with the money that you have, and price goes up, great, you make money, price goes down, you lose money. That's certainly the safest way to trade. I mean, you're just taking significantly less risk, right? And so therefore your risk is proportional to the volatility and the trend of whatever coin you're purchasing. And this is generally the route that I recommend for individuals with altcoins as well. I mean, these things move 10 to 20% very regularly, so there's really not a whole lot of need to utilize leverage unless you have a reason to utilize leverage, such as risk management. Then you've got leverage trading, which you really need to do nowadays on things like Bitcoin and Ethereum, because the movements on a day-to-day basis are just less pronounced. Of course, we can have big movements, but they're really not those big, the big altcoin movements that we're seeing. We don't see those movements on Bitcoin typically. So you need to utilize leverage so that you can make more money off of a smaller movement in price. This is just relatively normal. I really like what price is doing here right now. I think we're pretty close to an upside break here. By the way, and then you've got the DeFi strategy, which is essentially spot trading with extra steps, right? You're spot trading, and then you have the opportunity to lock your funds up and earn yield on your holdings, which is pretty cool. But when you depending on which one you go into, but over like 95% of them, you're going to be going into some form of AMM liquidity pool, automated market maker liquidity pool, which is going to expose you to impermanent loss. Now, if you plan on holding your asset for the long run, then impermanent loss becomes less of a thing. But it also does set you up for not being able to like take profits in a logical fashion, right? Like you'd think like if the price of something goes way up, you should sell, you should lock in some profits. But if you're providing liquidity to a liquidity pool, sometimes it becomes not that easy, because then you're going to suffer impermanent loss if the other token hasn't gone up as well. Now, yeah, so spot trading, leverage trading. So if you're trading something that moves a lot on its own, I don't think you need to use leverage, especially if you're newer to trading. If you're trading something that doesn't move a lot, you generally need to use leverage so that it's worth your time. So obviously I'm leverage trading on Bitcoin. And if you are crypto G-genning it in the DeFi realm, then you certainly don't need to use leverage. I think that I don't know. I feel like that just opens you up to so much risk. And Alex would say to not yield farm, to just speculate on the tokens. So, here's what I really like about this area. We can see that during this period of accumulation, right? So just for the recap, right? Like I'm still in drawdown because I actually entered here. I was a little too early. So, but throughout this entire period, and one of the reasons I entered because of this massive drop in open interest right here. You can see it here on the Klein. We can see that massive drop in open interest. That was one of the reasons I entered here. We had another massive drop in open interest. So this would have been a better place to enter. But anyways, my point here is that we see this big rise in open interest throughout this area while funding is positive, which implies to me that longs were putting on positions. And then they all get smoked on these stop loss hunts right here, these two stop loss hunts. So I like that. I like to see the flushing out of the longs before price can actually move to the upside. Let's go take a look at that. Actually take this off right now. Super duper DEMA. And we got a signal here on Shiba Inu. I would actually, I'm not going to lie, I would actually expect a bounce here. So we might be at the end. Again, we just had so many profitable super duper DEMA signals here. We'll see. It does look like we're going to get upside here. Just on just about everything. Altcoins are already starting to move. Yeah, all the altcoins are up over the last hour. So they're moving tentatively, but they're starting to move. And Bitcoin's just consolidating here, established a higher low. Now we've had some nice accumulation here, so we just need a good breakout here. So up here, again, that 41,800 that I was talking about earlier. That would be kind of the indecision point. If we push upwards from here, 41,800, 41,400, right around that range. So complete that gap right here. Break up. Move through this gap very quickly. Yeah, 41,800, I think is a good target. And then we'll see. That would be the time to reshort and then look for lower low. To look for that bigger gap to play out. This gap right here. Down here to 38.5. Down here to 38.5. Or we reclaim 42. And that would be a super duper DEMA long signal right there. And that would also be the reversal baseline bounce playing out, because then we'd reclaim the daily baseline. I think we lost the music. It seems, I guess it seems to me that most individuals that are not in the United States feel like there's absolutely no chance of war. Whereas as a United States citizen, like, I don't watch the news. I mean, I do, unfortunately, I have to watch the news, but I try not to. And it's like, that's all we're being inundated with. So somebody had interestingly pointed out yesterday, like, what does power do when they're losing control? I attempt to make you scared. But it could be just about anything. Oh, the Super Bowl longs. I appreciate that, Sneaks. I really do. Thank you, man. All right, we made a higher high. Let's check in on Luna. Some nice bullish divergence here on the 45, followed by the buy signal. So I do like to see that. And only at the 0 point here, coming up to that point of control resistance. And not much from here to here, so be able to get back up to 54 relatively easy if the market does break bull here. We're almost hitting that V Wap double bounce target up here, 40,482. Let's go to global politics. Ooh, maybe U.S. current affairs. I want to see if Polymarket has... Yeah, there's not... see if we search for Ukraine. Yeah, there's nothing on Polymarket. was looking to see if Polymarket would have any odds on what Biden's announcement's going to be. Crypto market sheds over $100 billion out of Biden's make or kill executive order by next week. Moving into the weekend, cryptocurrencies continue to exhibit frailty after Bitcoin, Ethereum, Cardano, and Solana slipped on Thursday following a report by Yahoo Finance. President Biden could issue an executive order that seeks to tighten the existing oversight on crypto. According to the report, the POTUS could issue an executive order next week directing agencies across the government to study cryptocurrencies and a central bank digital currency and come up with a government-wide strategy to regulate digital assets. Yeah. The fact that the United States is more focused on the Ukraine dispute could push further the said executive order. Also, executive order sounds dramatic, but Biden really can't really do much other than tell agencies to develop policy. Real action will remain with the Treasury, OCC, and the Fed. I mean, at the same time that Russian lawmakers begin public discussions on establishing crypto rules. I mean, this is good. I think this is good news. All right, let's go into yeah, that's a good point. We'll go for it. Yeah, legalization and hodlers protection. I mean, you know, the stock market's the most regulated financial products out there. You know what I mean? Stocks, securities. And so the more regulated Bitcoin becomes, the safer, quote unquote, it becomes for the people in that. It also does mean, Alex pointed this out earlier, it also means that it becomes a more crowded trade. Everybody's in it, you know? So the opportunities for this kind of exponential, massive, explosive growth does kind of go away. So it just depends on what you're, you know, kind of what you're looking for. If you're looking for slow, passive, safe, secure, compounding growth, then, you know, Bitcoin, I think, is the way to go. If you want, you know, and just the more risk you want to take on, the more gains that you want to try and make, you know, the kind of the riskier and more speculative financial products that you have to add to your portfolio. So are you saying that they don't treat the stock market like United States people do? Yeah. I believe it. All right, guys. I think I'm going to call it there. It's been a good stream, but we're going to switch over to the sexy camera and do our goodbyes. Hover rounds suck. They're cheap. You got to get the expensive ones. You got to get the rascals. You know what I mean? What's up over here, guys? Thank you so much for joining me for another exciting episode of the Breaking Bitcoin Market Update. As always, with your host, Justin Wise. I am the lead analyst and senior mentor at CrackingCryptocurrency.com who brought you this stream. Thank you guys so much for your participation today. Thank you so much for the kind words, the comments, for being along with me on this journey. Not a whole lot of action today. We didn't actually take any positions. We're just kind of waiting for the positions that we currently have to get back up to into the green. So that's where we're at. Looking like Bitcoin is putting in some signs of bottoming here on the lower time frames. Good points. We do have an announcement from Biden coming out later today on the U.S. Ukraine situation. So just protect yourselves. I heard some good comments in there. You know what I mean? Set your stop losses, preferably at break even or even invalidation, so that you don't get caught up in some massive stop loss on or liquidation or the beginning of a downtrend here. It does look like, all other things being equal, barring any kind of news event here, it does look like price does want to move up to the $41,800, $42,000 range, where we would likely see, again, maybe not likely, but where we have the potential to see a rejection, and then we can actually take price back down, or we reclaim 42,000 and we can start looking for higher prices. So still in the daily long, I'm still in my weekly long from the lows. I'm still in the Luna position as well. So we'll kind of monitor all that, and we'll probably have a decision on that, whether to hold those positions or whether those are going to be failures, probably by tomorrow's stream. So today's Friday. All right. So we will be back on Monday. All right. So guys, join the Discord if you want to get an update on my positions over the weekend. Discord.crackingcryptocurrency.com. The link is in the description down below. As always, if you guys want to support the show, if you're watching on YouTube, click the thumbs up button and subscribe to the channel so you never miss a daily stream and an update on the markets. And if you're watching on Twitch, DLive, Trovo, you guys can give us a follow or even a subscription if you want to support us in that fashion. Highly appreciated. And Facebook and Twitter, just share, retweet, or reshare the post. We always appreciate that, as well as liking the page. If you guys would like to trade on the exchange that we trade on, save yourself some money on fees, and also get a nice sign-on bonus, you guys can do that at bybit.crackingcryptocurrency.com. It's my favorite exchange. I've traded there for about 3 years now. Highly recommend it to anybody that wants to get involved with margin trading or even spot trading. A lot of products available there. If you guys are interested in joining the premium community and utilizing our premium indicator suite, as well as building your own technical indicator-based strategy from the ground up with our step-by-step instructions, you guys can find all of that and more at premium.crackingcryptocurrency.com, as well as access to our buy and sell signals and all of our educational content. All right, guys, I will be back on Monday. Take care of yourselves and trade safely over the weekends. Cheers.